Mortgage rates live with the mortgage calculator. We're going to wait a couple minutes to get started here just so we can go live on all of the different platforms. In the meantime, we did put the chat up on the screen so you can drop a comment there as you tune in. I see some people already dropping comments in there as well. We will get started here in just a few. Got a great topic to go through here today, kind of our topic of the week because we're doing some on our other trainings as well. But thank you, everyone, dropping comments already, tuning in early. Robert, Heather, Mark, Adam, the mortgage calculator team tuning in. For those of you just joining us, feel free to drop a comment in the chat there while we wait to go live on all the different platforms so we can get started. All right. Africa tuning in. Thank you, everybody, for dropping comments there in the chat. Ben in the chat there. All right, Richard, hello. Hello, everybody tuning in on YouTube, LinkedIn, Facebook, Instagram, all the different platforms we are now live on. So we can go ahead and get it started. What we'll do is we'll take this chat off the screen and then we will get into it. Welcome, excuse me. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. One of those loans that we specialize in is going to be the deep dive topic for today that we're going to get into later, which is short term rental properties, something that we have a lot of experience here with at the Mortgage Calculator. We have a lot of loan officers. We have over 320 loan officers all across the country, and a lot of them are experts in short term rentals. So we're going to get into that deep dive later, but before we do that, just like we do every morning, we're going to pull up the live rates for different programs and go through the actual interest rates. I anticipate probably some different rates than yesterday morning when we did this, so it'll be interesting to see. So let's go ahead, Nick. Let's pull up our pricing tool here and let's get into the rates for today and see what the market looks like this morning.
All right. So yesterday we didn't see much movement in the morning, but we did in the afternoon. So let me switch my screens here and we'll see if we can pick up some of those rates from yesterday afternoon when they started moving back down. So this is our pricing tool for our team of mortgage professionals. This tool will show us the general rate and APRs, including all the fees. For today, it is May 31st, just after 11 a.m. Eastern. So we have our general programs live. If you'd like a full loan estimate with a breakdown of all the fees that go into the APRs that we're about to see here, please get with one of our team members. We have over 300 licensed loan officers and are licensed in 24 states for primary and second homes. And we can do our business purpose DSCR, short-term rental topic for today. We can do those loans in 44 states. So to set up our general scenario for all of our demos today, we will set up a $400,000 loan amount. We will set an LTV of 80% loan to value. That means 20% down payment. We will set the computer to find the best rate at one discount point in cost. Most of our borrowers are asking to buy down the rate a little bit, so that is the most common request. We're going to compare our conforming conventional options. Then we'll check out our FHA options. And then we'll go into our expanded guidelines, aka non-QM, where we have over 5,000 additional options with alternative income. We don't do VA or USDA live. Remember, VA is only for our eligible veterans and active service members. If you do happen to be eligible for a VA loan, we can quote that no problem, but not everybody is. And same with USDA. If you do happen to be shopping in an area that's eligible for USDA properties, please let us know, and we'd be happy to quote it, but not everybody is. So we'll start today with our conforming conventional. We'll set a purchase, 30-year fixed loan, pretty standard, primary occupancy, single family home, one unit, state of Florida, county of Miami-Dade. And for all of our demos, we use an estimated FICO of 760 and an estimated debt to income ratio of 40%. So with these basic settings, let's check out the conventional rates this morning. All right, just as I suspected, we saw some downward movement yesterday, which is good for everybody, right? So the best option here, the computer found 6.99 rate, just under 7, great, for a 0.875 discount points and cost, and a final APR of 7.153. So yesterday the APRs were just over 7.2, I believe. So obviously we see some downward movement. Hopefully that continues for the rest of the week here. Now, if for any reason our customer doesn't qualify for conventional for any reason, or may have some issues giving some trouble, typically the next best option, we'll set up the same scenario, is FHA. FHA has a little more leniency on credit issues and has a much higher debt to income ratio we can go to. However, we'll keep everything exactly the same as our conventional demo. All we've changed here is a loan type to FHA, and that way we can compare apples to apples across the programs. So FHA rates looks like I think they've gone down a little bit since our demo the other day, so that's good as well. So FHA best option here, 6.125 rate for 1 discount point in cost and a final APR of 6.717. So remember, APR includes all the costs. FHA does have upfront mortgage insurance and yearly mortgage insurance, so this APR does take that into account. And as we can see, even with all that taken into account, in this scenario specifically today, FHA is quite a bit cheaper than conventional. So definitely recommend our borrowers out there, even if you do qualify for conventional, still check out FHA. In this exact scenario, it's actually a little bit cheaper when you compare the APR apples to apples. Now, if for any reason our customer doesn't qualify for FHA or conventional, many other banks and lenders don't have other options, but that's where we love to shine here at the Mortgage Calculator, where we have over 5,000 other options for our borrowers to give them other opportunities. That's under expanded guidelines, also known as non-QM. So when we select non-QM, everything else will stay the same, but we get one new option, which is our income verification. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what everybody's used to. So typically we would select a non-QM program to choose an alternative income documentation method. So we have asset-related programs, we have business bank statement programs, we have our investor programs we'll talk about here in a minute for investment properties. Our most popular program is our personal bank statement 12-month program. We have RSU, stated, VOE, 1099, P&L, no income, all kinds of different options. But our most popular for our demo today is our 12-month bank statement option. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of taxes, have various write-offs and other things going on that may not allow them to reach the income level they need to qualify, or not allow them to reach the amount of income they need for their dream home. So in this case, instead of 2 years tax returns, we're going to simply use their last 12 bank statements to determine a debt to income ratio of 40 in this example, using just their cash in their bank statements, no tax returns involved at all. So most of our self-employed borrowers qualify where they want to qualify at all, or qualify for much more income, double, triple, quadruple the income, using bank statements as they would with the full doc. Therefore, we can qualify them for a much larger home that they really want to get. So with these basic settings, let's check out the bank statement options today. Awesome. So best option the computer found, 7.25 rate for 0.875 discount points and a final APR of 7.312. So remember, conventional was at 7.1 something. Now we have non-QM bank statement options for just a hair over conventional. This is amazing, guys. All of our teammates out there definitely recommend. Compare all your options with your borrowers. There is a lot of flexibility that we get here with our non-QM options. For example, some of these may allow, obviously at a little bit of higher rates, there's a ton of options here, but some of these at the higher rates may allow things like bankruptcies and foreclosures and other things. So please get with our team. They'll navigate which one of these programs will fit best for you. Now, before we go into Jose's deep dive, we always want to do live pricing on investment properties. So for our final 2 demos, we will set investment property as the occupancy. We love to work with whether you're a first-time investor, you have dozens of properties, we have some great options for you. We'll set the LTV to 80, just like all our other demos, 80% loan to value, 20% payment. We're going to compare our conventional investment property rates with our expanded guidelines, aka
Uh-oh. Jose, is he frozen for you too?
Yes, sir.
Uh-oh. Oh, looks like. Are you back, Nick?
was I frozen?
Yeah, you were frozen and then you totally dropped out. So you got to share your screen again and pull up the investment rates. So there you go. So those are the conventional conforming investment rates there.
Yeah, let me go back then and redo it. All right. So we were on investment properties. We set investment property, set 80 LTV. And as I dropped out there for investment properties, whether you're a first time investor or you have dozens of properties, as I mentioned, we have some great options, but there's only really two options to compare here. We have conventional conforming and we have our expanded guidelines, aka non-QM. FHA, VA, USDA are not eligible for investments. So this first demo that I pulled up when I dropped off there is conforming conventional. The only thing we've changed is investment property. So let's check out the conforming rates. So this one's coming up as conforming. It's not actually conforming, so we won't look at that. The first conforming option here, 7.375 rate for 3.5 discount points in cost and a final APR of 7.625. So for investment properties, the GSEs, the government entities that operate the conventional loans, they have added penalties here. So we say this every morning, but the computer is not able to find conventional programs with one discount point in cost for investment properties because of these penalties. So most of our investors are asking for other options. They don't want to pay this much out of pocket in points. They don't mind going up in rate a little bit. And that's where we have some restrictions on conventional, and that's where we love to present our non-QM options. So for our final demo here, we'll set investment property, set it to 80 LTV again. And we're going to check out our investment options under expanded guidelines, aka non-QM. So for an investment property, the most popular income option by far and our most popular product in general is our DSCR product. And that's because it doesn't actually require any income or employment info from our borrower. We're simply going to use the estimated rental income from the property we're purchasing here in this demo to determine a debt service coverage ratio. That's a DSCR value, and that's a value of 1.00 or higher if the rents cover the PITIA of the property expenses, the actual expenses for the property we're purchasing for this mortgage. So if the property cash flows on a monthly basis, aka the rents cover the expenses on a monthly basis, that's a ratio of 1.00 or higher, aka the property cash flows. We still have options for a DSCR ratio under 1.00 where the property doesn't quite cash flow on a monthly basis. So tons of different options here under these programs. I'm going to go ahead and delete this for our demo so that we can see all the different options pop up. And finally, for a non-QM investment property, we must select the prepayment penalty option. We always choose 3 years as the standard. We can choose 0. However, that will limit our amount of loan programs and cost a little bit more, obviously. And we can choose 5 years if we wish, but not all loan programs allow 5 years. So that will limit the amount of programs. If we do find one, it does save us some money. 3 years, however, is the standard, so that's what we will always use for our demo. So let's check out our DSCR rates this morning. Remember, conventional was at 7.6 something APR, and here we have a DSCR option, 7.99 rate, 0.725 discount points. So look at that, we've solved the problem for our investor, saving money out of pocket. And the APR is 8.047. So remember, conventional, the best APR was 7.6 something. For just a little bit higher here, we can go into the DSCR program. Tons of flexibility with DSCR because we don't need any employment. We don't need any income. Our investors that have multiple properties can cash out multiple properties to then purchase multiple properties and can have dozens of DSCR loans going on at the same time. So tons of flexibility here. Also, if you scroll down here, we can see there's tons of different options with different DSCR values, different prepayment penalty values. So please get with our team. They'll find the best option for you. Some of these down here at the higher rates may allow things like short-term rental income, which Jose is going to get into here in a minute. So tons of different options here. These are probably our most popular. options in general, and especially for investors, and especially for short-term rental property investors. So let me go ahead and switch my screen, and we'll get into Jose's topic for today, which is going to be our short-term rental property loans. Typically, these are done under the DSCR type of program. That's probably the most popular. However, there are other options there. We talked about a little bit last night in our training. We have another training for our team tonight where we'll go into some more detail of structuring these deals. But today, Jose hopefully has some live quotes of a few different options for us. So if you're ready there, Jose, let's have you go ahead and take over.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, short-term rentals are the rage, as you all know, depending what market that you're in. There's definitely been an increase in the purchase of short-term rental properties, the conversion of properties to short-term rental properties, for a lot of different positive reasons. In many markets where short-term rental properties are popular, we're seeing more than 50% of the properties in an area that are being rented by vacation travelers, and are not vacation travelers, but I guess I would call it our nomad workers that are deciding now, due to all of the benefits of increased flexibility with remote working. So a lot of these people are now not just necessarily on vacation in those short-term rental properties, but they're actually using them as alternative living. So a lot of different options here that we can do. And we'd like to, as I was mentioning yesterday in our training, there are regular full doc options, bank statement options for your borrowers that qualify, but the majority of our borrowers that are looking to finance their short-term rental investment properties do end up opting for the DSCR option because of the increased flexibility that it offers in the way that it qualifies the borrower using the rental income generated by the property. And depending on which option that we select, there are multiple ways, there are multiple paths to the monthly rental income. And that's why we love the DSCR options to provide solutions to our short-term rental investors. So what I'm showing us today are going to be purchase options, because that's the theme here. Our borrower is going to be purchasing this, and obviously after he purchases it, we're going to cash him out and he's going to buy a few more. But in our first option here, we can see how it's on how we structure the deal from the inception of the loan, right? We don't want to straight out go and put this as a short-term rental property, because he's probably buying a property that could be vacant or have a month-to-month tenant. So when we order the appraisal, there will be a 1007 market rent schedule also ordered with the appraisal. That's going to determine what is the monthly long-term rent estimate for that property. The fact that the property may be vacant or have a month-to-month tenant is not going to affect our LTV in our scenario. So in our best case scenario, where we have that great property, we would be doing an 85% LTV option using long-term rents. So here, for our $500,000 purchase, only $75,000 down, and we have 8.99 as our lowest cost option, and you can buy it down to 8.125 at a little bit above 3 points. So this is our 85% LTV option for a short-term rental investor when we can cover the necessary DSCR with long-term rents. Now, keep in mind, for the 85% LTV, the DSCR is going to be a little higher. It's 1.25, but for the typical property that's going to fit the 85% LTV profile, that should not be an issue. Especially, we get a lot of these properties, $180,000, $200,000, $250,000 that have long-term rents of $2,800 a month. $3,000 a month, they're definitely going to be way above 1.25. So now here we have our 80%, just so you could compare rates again. This is using the same logic here, where we are going to present the application as a long-term rent. Remember, there's probably month-to-month tenant, or it could be vacant. The A borrower looking to purchase a property to do short-term rental on it is definitely, unless it's an amazing deal, is definitely not going to be buying a property that's encumbered by a tenant for the next 10 months, right? That just would not fit the plan, unless again, it's an amazing property and the property was cash flowing, where maybe he could do some renovations while he was waiting for the tenant to move out. But in this case here, we have 80% LTV. Pretty amazing rates there. Look at that, 8.375% with an $1,100 lender credit. And you can buy this all the way down to 7.375. Mind you, this is DSCR now we're talking about here, right? Not Fannie investment full doc, because when you see these great rates, you may think I made a mistake. Now, here we're looking at, and you will notice that the rate is actually the same from this one to this one, because there are same option but different structure, because this option does allow us also to use short-term rental revenue reports. So we can either use 12 months short-term revenue platform revenue reports, or 12 months short-term rental deposits that are clearly identified as coming from the platform into the borrowers, or if you are able to get the seller to actually disclose on this purchase, which is where it would only be applicable, actually, if it's a purchase, it would have to be from the seller. And we do have scenarios where they may not provide the bank statements, but definitely the short-term rental revenue reports, or maybe from a channel manager that they may have, where they manage all of the different platforms in one site, and there they have their combined revenue reports. Then that can be provided, and definitely that will work. I've actually done that before myself on properties where I've been an agent, where I've provided that document to an appraiser. So here we're looking at 8.375, again, $1,100 lender credit, and all the way down to 7.375 for your short-term rental property on a purchase using 12 months revenue report. And notice here in red, bold, no LTV adjustment for using short-term rental revenue reports. And in this case, for identifying the property as a short-term rental, because sometimes just identifying the property as a short-term rental immediately results in a 5% LTV reduction. So you have to be aware of that when you're reviewing your guidelines. So now we have it a little bit more interesting here. Now we're getting a little bit more esoteric with our AirDNA option. So there is a 5% LTV adjustment when using the AirDNA option. So 75% LTV is the max LTV, because essentially it's going to be an 80% program drop down to 75. The 85% option never has an AirDNA nor short-term rental option. So this would be your AirDNA max, 75%. Now, why would you use AirDNA, right, instead of some of the other DSR options which we may have? And the reason is going to be the rate, and possibly the, some other reason you may need it. But here it's a 1.0 option, right? 1.0, but at 75%. So you do get 8.625 with a $94 lender credit, and you can buy it down to 7.625. And again, this is for your trophy properties that you need to do something with. So very good option there, 75% using AirDNA. So now we have another option, again, for those trophy properties where AirDNA and short-term rental comps are not available. Because remember, AirDNA is a database, simply a database that you use to where they compile comparable short-term rentals similar to the MLS. You could find rental comparables of your realtor or where the appraiser goes. Well, this would be for short-term rentals. But in some markets, there just are not any comparables in a close enough proximity to the subject, and hence there may not be short-term rental revenue reports available either. And there are no short-term rental comps that the appraiser can grab from the MLS. Then you would go with the 0.75 to 0.99 option. We have two of these. This is the first option, which gives a little bit better rate and lets you go to 75% LTV using long-term rent. Now you will notice that the rate here is actually a little bit better than the AirDNA option. So remember what you're looking at. This, AirDNA option maybe is strictly if it's short-term rental and all that kind of stuff. If you went down that rabbit hole, but if you're looking at apples to apples, this one has a better price. It's a $563 lender credit, and you can buy it down all the way to 7.25 because this is another option, totally different conduit that we have that has better pricing. So 75% LTV on both. This one, better pricing, simpler loan. And then our last option here for when you just totally got to have it, our 0.7 or less than 0.75 option. This is where it doesn't cash flow, not even at a 0.75 at a 75% LTV. So you'd have to drop the LTV down to 70. So again, when there's absolutely no short-term rental report available, no AirDNA possible, your long-term rent doesn't cash flow above 0.75 or above DSCR, then you go down to 70%. And there's no reason that you would not be able to close this loan unless the borrower just had different expectations on what they felt that they could do. Obviously, in this option, we know it's 70% is the max. If they can't get there, then we'd have to figure alternative plans. But this is an amazing option considering this is could be a DSCR down to like 0.1 or 0.01, and we would still fund this loan.
Okay, great. I don't see any questions here, so I think we can wrap it up for the loan officers out there. We do have another training on this tonight at 7 p.m. Eastern time on our YouTube channel, which is our loan officer training series. And we're going to go even more in depth into the short-term rentals. So be sure to tune in then as well. If you are an investor looking to get involved in some of these programs, you can contact us at themortgagecalculator.com. You can email us info@themortgagecalculator.com, and we can pair you up with one of our 320 loan officers all across the country. Thank you, everybody, for tuning in. Remember, we do this show 11 a.m. Eastern every single day where we go through the live rates for the day and then do a deep dive into a different topic, just like we did today with the short-term rental properties. So thank you, everyone, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everybody tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everybody take care.
Thanks, everybody.
Thank you, everybody.